how not to get burned in a deal. Most investors look at private deals the wrong way. They start with the return. That's not how real investors evaluate deals. Hey, what's up, guys? Matt again. I am back from vacation and I am a little bit sunburned, but don't worry, because today I'm going to teach you guys how not to get burned in a deal. You see, most investors look at private deals the wrong way. They start with the return. They ask, what is the internal rate of return? What is the upside in this deal? How much money can I make? And well, that's not how real investors evaluate deals. Look, as you guys know, I've been investing for 25 years in both private and public markets. The best investors that I know never start with the upside. They start with the structure. Let me explain what really matters. You need to know how you're going to get paid. You need to understand where you are in the capital stack. Are you first or are you last? And is there real cash flow or is it just projections? Second, you're always going to want to know what your downside protection is in case things don't go as planned. Is there collateral in the deal? Is there a margin of safety built in? Can this deal absorb any stress? You see, good deals don't just work out when everything goes right. They actually hold up when things go wrong. Third, it's alignment. You never want to be involved in a deal where the operator or the sponsor does not have any skin in the game. So you need to ask yourself, are the incentives aligned with the investors? Or does this operator or sponsor get paid regardless of the outcome? Trust me, alignment matters more than any presentation. Fourth, it's simple. It's time. We need to know how long our capital is going to be committed for. We also need to know what has to happen for us to get paid. And our timelines need to match our allocation strategy. Because you see, a great deal with the wrong time horizon is still a bad decision. This is where most investors, they get tripped up. They chase returns rather than understanding the structure. They trust the story and never ask the right questions. They treat private deals like they're trading stocks. And whether it fits the role the capital's supposed to play. Because a good deal in the wrong place is still a bad investment. Once you understand this, private deals stop being confusing and they become clear. Guys, I ran through a lot of education with you guys. Next time, we're gonna come out and we're gonna bring out some deals and we're gonna actually break them down for you. This way, instead of just speaking in hypotheticals, you can see exactly what I'm talking about. Make sure you hit that subscribe button, like, comment, share. If you have any questions for me, always feel free to shoot me a DM.